Okay, I'm going to get right into the stock market analysis. We're going to do a closing market wrap video. We're at some key levels, so I really wanted to do this end of the day video just to point out a couple concepts and look at some key levels. I'm getting some subscriber talk saying, you know, this isn't a great short, nothing looks good, you know, we're closed above the 200-day moving average. A couple people saying, how'd that short work out for you? You know, just kind of taunting, and that's fine. That's exactly the sentiment that you look for when you're taking a short. Again, I don't want to short when everything looks extremely bearish. I want to short when things look extremely bullish. Max bullishness is where is ideally where you want to get short at. And just the same as I don't want to go long at max bullishness either. You know, I want to kind of do the opposite. So this is where we shorted last, right here on February 4th. All right, so I short right there, right when we're at kind of at the peak where things look like they're just about to start to turn, and sure enough, that was the right trade. We sold down quite a bit. But again, most people didn't want to short because the trend is your friend, right? And it's a bullish trend, so there's no reason to short. And then most people don't want to short until you're way down here in the lows and everything looks bad, and you're pretty much the headlines are telling you you're in a bear market or a correction, and that's where everybody wants to short at. That's not how we want to do it. That's not how you're going to make money. Ultimately, you want to short when at max bullishness, and you want to go long at max bearishness, all right? And it's just a matter of trying to find those areas. And we won't always be right, but staying close to risk, close to key pivot levels is really the name of the game, so that if we're wrong small. So zooming into today's time frame, I'm going to point out a couple things on triple Qs here. One, we closed above the 200 simple moving average right there. And you'll see the last time that we closed above the 200-day simple moving average on triple Qs was right there. All right, so if you shorted right there, you were rewarded, for that. Again, this is where we're at. So this doesn't mean anything to me. Ultimately, this to me looks exactly like the area where I want to short at, just like this is an area where I wanted to short at. And in fact, if you go back and watch the video that I put out on February 2nd, this is exactly where I reshorted the market right here. So I talked about that back then, how I'm shorting the market right here, and sure enough, that worked out. Again, we're going to do it again, all right? Doesn't mean it's going to work out. Nothing's guaranteed, but we're going to short right here today, and I did that this morning, added to some short positions, and took some new ones. Now what we're looking for is that next move, impulsive leg lower. All right, what I want to point out, the reason why I'm looking to short here is, one, just a brief close above the 200-day moving average, not super impulsive. And if I look at the volume, not really breakout volume. There it is right there on the triple Qs. Pretty mild volume on that move. Now, if institutions were participating, saying, all right, we're breaking out off to new all-time highs, we should see some breakout volume. And just to give you guys an example, if I roll back to the triple Qs, I think I was looking at this. Here's an example, guys. IWM, I had to look for it. I was looking for it. Okay, look. On IWM, you had a high right here. All right, this is a daily chart, and you had a relatively same high right here, okay? That's not what I want to point out. What I want to point out is look at the volume when we actually broke above these levels right in here. I got to zoom in a little bit, but here is the former highs. And as I zoom in, you'll notice right there. See that? You gapped up and you moved higher. Now they sold into it, but still holding above there. And that was your breakout right there. That's your breakout candle. Okay, when you got that breakout candle, look at the corresponding volume that came with it right there, okay? See that? Breakout volume, all right? So you had breakout volume, you had a breakout candle. That's the kind of price action you want to look for. Regardless of it selling down, it still held above there, continued to hold, and off she went, but it came with breakout volume. So going back to triple Qs, we're above the 200-day SMA. Let me just zoom in. And we don't really have confirming volume. Not to say that we can't hold up here, because you don't always have to have the volume to hold, but it does look suspicious. So it's an objective area to short at, and this is where I want to start reestablishing my short. Looking at the hourly chart on triple Qs here, you'll notice right there. Okay, on this hourly chart, see the RSI and the PPO. Let me zoom in just to kind of point it out. See that right there? You've got mildly lower high right there, starting to turn down, than from that former high. And zooming back out to the chart here, you'll see that there it is, negative divergence. So there's your former high here, and we've made a series of higher highs in price while momentum is making lower highs. So this is a divergent high. Doesn't mean it has to work, but it does tell me that it's very likely and probable to fail. Okay, so it's like if you're counting cards on the blackjack table and you've got the count, if you know anything about card counting, and you've got the count in a favorable way, doesn't guarantee that you're going to get that face card or guarantee you're going to get the 21 blackjack, but the probability is in your favor. So this is where you want to bet big, basically. And that's what I'm doing. You know, that's essentially all I'm doing is taking a position when the probability is in my favor, and then we just manage the risk, all right? If you're interested in learning how to manage risk, then you'd want to check out my stock market technical analysis course. Also looking at the PPO here, zooming in on the hourly, there it is. All right, I've already marked it out, but basically you've got a lower high. Did I grab? Sorry, that might be the RSI there. The PPO right there. Okay, there it is right there. So you have a lower high, not confirmed yet, but you have a lower high. So we want to see that start to turn down. But at this moment in time, it is a divergent high, meaning we've got lower momentum and we have higher price. So price is diverging from the momentum indicators, and momentum often leads price. So this is telling me that the move coming next, not guaranteed but probable, is that price starts to move down. Okay, so that's really it. That's all I want to point out on the triple Qs. Okay, let's look at things like Tesla. Tesla, all right, rallied today, and I got to kind of clean up my chart. But you can see that basically just rallied into resistance, closing pretty much right there at that key level. You know, it's about 1100, and that's it. We closed right at resistance. So I'm looking for that rejection. Probably going to come in the form of a gap down, to be honest. That's usually how these things work. We've had to me, this looks like a bear market rally, and usually to trap the longs, you need to gap down. I don't know how big the gap will be, but something to look for. We might trade up here for a couple days, kind of just chop around. Maybe we'll just do that and then go. But again, I think there's limited upside from where we're at right now, and that's why I started taking these positions. IWM, now this one broke out a little bit more, a little bit cleaner, kind of a breakout above the key resistance right there, 208.95, 208.94. No real volume, no breakout volume per se. And again, that's what I talked about here in IWM with that breakout volume there. This is not really the same kind of volume, relatively low volume, not really even above average, about average volume. So that's one thing to look at. You look at the hourly chart. I haven't even looked at this into the close, but likely going to be very similar to the triple Qs. I got to kind of clean that up. But as I zoom in, there you go. Negative divergence. Right there, all right? Lower high than before, and then zooming back out, looking at the PPO, zooming in, same deal. So it looks, basically the same as the triple Qs. All right, so you have momentum not making higher highs yet, and price making higher highs. Now, doesn't mean that, momentum we could just continue higher tomorrow, burn through the divergence, and maybe this breakout does stick. Okay, and again, that's why I position right at key resistance right here. So yeah, we're down a little bit. You got to give these things a little bit of room, because there's always stop raids. The algos know where these key levels are. They're going to run it up into certain levels, run a bunch of stops, and then reverse. And that reverse might come in the form of a gap down. Okay, so maybe we gap down. First target would obviously be this gap fill. That's going to be probably some support. Maybe we bounce around. But ultimately, I'm looking for lower prices. Let's jump over to futures land, and we'll look at the S&P futures, ES. All right, one thing I want to notice, see where we're closing today, and basically a back test of major resistance. All right, if I look out and I roll out to, you have to look at the weekly to see it, but there's your 2009 lows right in here. And you can see support. My line probably can be tightened up a little, but there's support. Once we broke down resistance. Again, this was the Fed. The Fed came in and cut rates, did some money pumping. This is COVID drop. They obviously cut rates, did some money pumping. and then they pumped us back above the support line just for about a year or so. We were up here. Once we were above, this was support, support, support. Okay, and then we finally broke. There's your sell signal. All right, this is a weekly chart, so things take time to play out. They're not going to just happen, in one day. We're going to just crash straight down. So we got a sell signal, broke down, counter trend rally right into major support. This is objective. This is where this should start to roll over. Now we could trade here for a couple days, but again, I'm not looking for too much more upside from really where we're at. I'm looking for limited upside. They might want to pop it maybe intraday or something, but ultimately limited upside, and then we make the next leg lower. So again, we have a sell signal, we have a break of trend, which means that uptrend that was in play, I believe, is now a downtrend. So you make lower highs, and then you go down to make lower lows. Okay, so that's that in the SPY futures. And one thing to just kind of notice, I don't want to read too much into it, but what we've seen over the last 2 weeks is all the trash stocks like AMC, GME, which is GameStop, the pot stocks. Today I look at the kind of the high flyers, and you have like Space, which is Virgin, you have Rivian, you've got Robinhood, all the garbage stocks that have been really hit pretty hard recently. They've all been rallying over the last 2 weeks or so. And you'll notice here AMC, I just want to point this out. Big resistance right there at $30, and it's about $30, we'll call it. And you can see that was support through here, kind of some support. Then we broke and it was resistance. And what did we do? We rallied really impulsively right into resistance. They overshot the 200-day simple moving average, sold back down, closing right at resistance. All right, so we're seeing these things at least hold their resistance levels, and I'm looking for more downside on this. And just to, kind of lay it out, that might be the end of this speculative kind of 2 weeks we've been in, which to me screams of a bear market rally when you get just this like dash for trash, and everybody's just, gambling basically. Well, we're looking for lower prices. So that might be the start of the broader market starting to roll over as well. Okay, so that's all I really have. At the end of the day, whether I'm right or wrong, we'll keep the losses small. I did take a position short in several of these indices, looking for some downside. And again, it's just all about limiting your losses if you're wrong, because again, the best we can do is try to put the probabilities in our favor and then manage risk. So we'll find out here in the next few days if this is going to work out or not, and if it doesn't, we'll just close out those positions and look for the next opportunity. Okay, guys, thanks. Drop me a thumbs up on your way out, and I'll catch you on the next video.